GM, good morning. Welcome to the Milk Road Show, the daily crypto show that makes sure you don't need a trust fund to build a legacy. I'm your host, Jay Hamilton. It's Saturday, April the 5th, which means we're back with the Milk Road Pro research team. That's right, we've got Kyle Martin. Adrian was having internet problems, so he couldn't join us today from Southeast Asia where he's traveling. Today, we are going to break down first off, some really exciting news, which is Circle has filed for their IPO. We're going to talk about the IPO. Are we going to invest in it? What are our thoughts on it? And the impact of crypto IPOs, which there are many likely coming in 2025. What does that mean? We also talk about some Ethereum FUD, more Ethereum FUD. Oh my God. Ethereum revenue hit its lowest month since 2020. Woof. What do we think about it? Is this FUD legitimate? We're going to compare it to Solana, what their revenue is. We're going to dive deep into that. We also talk about bit bonds. What are bit bonds? It's the first time you're hearing this. This is this idea that the US has been told by Trump and his executive order that if any departments within the US government can find budget neutral ways to acquire Bitcoin, then they can go do that. So, what do you think that does? A whole bunch of organizations are trying to figure out what are budget neutral ways to acquire Bitcoin. Here's one idea, very interesting concept, very interesting idea. We're going to break that down. So stick around to the end to hear that. If you guys enjoy the show, if you guys are a fan, please do us a favor, subscribe and hit that like button or leave us a comment. Two things. One, we want to chat with you guys on a regular basis. We want to know your comments. We want your feedback. And second, it really helps the show grow. The algorithms love it when you interact with us. So please take a second and do that if you can. Today's episode is brought to you by MoonPay. Trade crypto fee-free, fast, and on your own terms. Also brought to you by Coinshift, powering top crypto treasuries with their yield-bearing stablecoin CSUSDL. Let's jump in and hear from the Milk Road Pro team.
We're back. What's going on, guys? It's the pro team, except we are without Adrian. He's actually somewhere in Southeast Asia right now, and I think his internet's not doing so hot. So we don't know where he is. Maybe he'll join us like midway through this episode. But for now, it's myself, Martin, and the great late Jay Hamilton.
My dad.
We got. I don't know. I hope not.
I did show up late to the recording, so
yeah, he did show up late today. But Jay's got. He's dealing with some sickness in the family, so we hope that he can survive through this episode, as well as all the listeners. So, all right, we're going to talk about some big news coming out of Circle. Obviously, we always talk about stablecoins, but some real big news. Finally, everyone is going to be able to get some upside to the stablecoin adoption that we think was happening because Circle's going public. So we'll talk about that, our thoughts there. We're going to talk about Ethereum and Solana. There's some stuff going on with fees. Ethereum has hit its lowest fee revenue since, I think, June of 2020, which is quite wild. So we'll talk about what's going on with that. And I think there's a lot of FUD there too. So we will just kind of, lift everyone's spirits. Hopefully we had Vlad from Robinhood on the podcast earlier this week. And so we just wanted to have a little discussion after the fact on what our thoughts were and what we're thinking about Hood as an investment. And then if we have time, we'll talk about the Bitcoin bonds, a new thing that is going down in the US. So lots of cool things going on in the space. I know people are still quite bearish on the timeline. Although I don't know, we're recording this Tuesday, maybe by Saturday, everyone's, flipped and we're so back, who knows? We're kind of so back and then we're so over every other day here. So we'll see what's going on by the time you guys get to listen to this. Anyway, let's start with Circle. I'm just going to share a screen here. There we go. So some breaking news that came out yesterday. So March 31st, Circle has hired JP Morgan and Citi for its IPO. They're filing in late April, which probably means, who knows? But assuming that's like 2 to 3 months before they go public. The SEC has been known to make this much longer for crypto companies, but that whole world has changed. So hopefully we'll get treated fairly this time. And this means Circle could be going, public by the beginning of summer. Which is pretty freaking awesome. Circle is the fastest growing. So obviously Circle is the provider of USDC, the fastest growing stablecoin in terms of the big stablecoins in 2024. Obviously, they're also owned a large percentage by Coinbase. So the two crypto big public companies will be both, Coinbase and then a company owned by Coinbase, which is quite interesting. I want to read a letter by Brian Armstrong in just a second on stablecoins, but just, yeah, any reactions, any thoughts? Are we pumped? What are we thinking here?
I haven't read this letter from Brian, but obviously Circle going IPO is very bullish. I mean, last year when they were trying to do the IPO, I think their valuation were around 7 billion or something. I wonder how's that valuation has changed over the last year, and once they do IPO this year, what's the valuations gonna look like? And we will also finally see how much of the Circle Coinbase owns, and yeah,
Right.
it's
Yeah, we'll
it's
finally
getting
figure
very
that out.
interesting. Yeah,
Do you remember when they were talking about it last year when they were thinking of going public? Do you know when that was? First
I
of the
don't
year,
remember.
middle? So let's say it was sometime in the middle, which was most of the year they were around 30 million or 30 billion in market cap of USDC, and they were valued at 7. Now they're at 60, so they're double. So are they now valued at 15 billion? Crypto is obviously also a more bullish industry now from pre-Trump era. So are they? Yeah, what their valuation is going to be quite interesting. 10, 15 billion. I don't know. We'll see. What does that mean for Maker and Sky? Should it be valued at some sort of percentage of that? At least we're going to finally start to understand. And if Circle is 15, 20, I think that means that Sky's got to be a lot higher than it is today. So yeah, very interesting for this to come into the US. I'm excited for it. I think, we're obviously super bullish on stablecoins. We've been talking about it being the number one use case in crypto, but you could never really get any upside, which is the annoying thing, right? And other than Sky, of course, and Athena, but from the two kind of majors, Tether and Circle, you can never get upside. And now I think that's coming. So here's what Brian Armstrong wrote, which was just, to me, it's just super bullish. But so his TLDR, I'll read that first, which was US stablecoin legislation should allow consumers to earn interest on stablecoins. The government shouldn't put its thumb on the scale to benefit one industry over another. Banks and crypto companies alike should both be allowed to and incentivized to share interest with consumers. This is consistent with a free market approach. And basically what he's talking about is there's the stablecoin bill that's coming. I believe it's next month. Is that
No
is that
set
correct, Jay?
timeline, but very soon. Like
Yeah.
some people think by the end of April, May, like it's very quick.
So actually, that timing's crazy. If that goes live, then Circle goes public. Holy shit, we could be way more, bullish for Circle here.
More
But
tailwinds, guys. More tailwinds.
yeah,
You think macro will be where we need it to be by then?
yeah. So in that, there's like a structure for it right now. It's not approved. It's not live or anything. But part of it was saying, one, no algorithmic stablecoins for 2 years, which makes sense. I think that we all agree on that one. But the other one was some basically no yield bearing, which we weren't quite sure why. So no yield bearing stablecoins. And I think what Brian's saying is like, hey, we should have that. Right now, if you think what he kind of explains in this, it's a long thread, so I'm not going to read it all. But basically, he's like, right now, when you, as an American citizen, you put your money in a bank and they give you yield. Well, at least they used to give you yield. Now they give you like, I don't know, like 0.01%. Like it doesn't count to anything. But like,
Yield for ants.
yeah, you used to be able to get like 2, 3, 4, 5% when you'd put it in your savings account. So that's actually how banks started, right? It was like, hey, come put your money here, we'll give you yield. And then it's still allowed, but banks just don't do it because they don't really need to. They know everyone will use the bank anyway because they don't want to put it under their mattress, and so they put it in the bank, but they pay them nothing. But they're allowed to give the yield to their customers. But for some reason, stablecoins, which are essentially the same thing, right? It's like, hey, I just want to hold dollars, but a digital version rather than in a bank. I'm trusting USDC or Circle, to hold my dollars. And then I can do things with those dollars. So it's a little more useful than keeping it in a bank, right? But it's basically the same structure. There's just dollars in a bank somewhere. They put them in treasuries or whatever to earn some yield, and they then share that to the customer. But for some reason, in this current stablecoin bill, they're saying that maybe this isn't going to be allowed to give the yield back to the customers or the consumers. And Brian Armstrong is saying that makes no sense. Let's just make stablecoins the same as a bank, right? Because one, consumers win, right? They can have their dollars and they can get yield on it up to average in 2024 was 4.75%. So that's pretty cool. He's like, billions of people around the world also win, right? Because people outside of the US can also get access to dollars and get access to yield. The US economy wins, right? Because stablecoin providers like Circle and Tether are some of the top holders of US treasuries, and the US needs more buyers of US treasuries. And so if we proliferate stablecoins around the world, you have way more buyers of US treasuries. So it's like, why aren't we doing this? The tech is there. It all makes sense. The only problem right now is the law. And we're going to put the stablecoin bill in place. If that allows for them to share yield, I think that Circle would even start to share yield, which would be really, really cool. I mean, Coinbase is already sort of doing this like roundabout way of doing it. If you hold your stables, your USDC in Coinbase app or on Coinbase wallet on chain, you get the yield, which is pretty sick. But they have to kind of do it of like, they get the yield from Circle, and then they say this is like a marketing expense to the users rather than they're just giving the yield through, which is kind of just this kind of weird way that doesn't really make sense. So anyway, really big things are happening with stablecoins in the next 1 to 2 months, right? We're going to have the stablecoin bill. Hopefully they allow for yield bearing. If they do, I just don't think people realize how much of a game changer this is going to be for the world to do this, because it's not just like, hey, us crypto people can hold on to stablecoins and get some yield. It's going to completely disrupt banks. Because why, if this is now legal and Circle and Coinbase are creating these easy ways to do this, and Robinhood, for example, they already talked about doing the same thing on the episode we had on Monday. What are banks going to do? They're going to have to find a way to start to give yield back to users, which is going to just flip how the US banking industry works. So we are months away from potentially just a massive disruption to the US financial system and globally. And I just think that's super exciting because, one, you can get upside to it by holding Coinbase, soon by holding Circle, or Sky, which we always talk about. I just think there's just fireworks are coming. It's going to be very, very exciting. I don't know if you guys have additional thoughts here.
Yeah, I'm super excited about this. Sorry, I was a little bit groggy when you first asked us how we felt. I feel like our reaction to this IPO wasn't as enthusiastic as we could have been. I think that like agree with all your comments about Circle, but let's just take a step back from just not even just Circle, but like IPOs happening in the US, and the impact of that cannot be understated because,
Yeah.
I mean, just the simple credibility that it brings to crypto. There's a great line from one of Sandkelp, a guest we had on the show last week. He said, IPOs are like crypto's graduation ceremony, where it's finally handed a diploma and a chance to explain what it actually does to its worried parents.
Yeah, right.
But it's true, right? Like we now will have a lot of traditional finance does not learn about assets until they go public, right? And once they go public, then they get into this this system of quarterly reporting, which is really how a lot of investors learn about these assets and these asset classes and these companies. And so you can't understate what having crypto companies at Circle scale, like obviously it does amazing for stable coins, but also for crypto, it just brings so much legitimacy and so much education and knowledge to the greater financial markets that are you can't not pay attention anymore. It really this theme of we are going from Wild West to the corporate suits. We're ready for that moment. We're graduating. We're growing up. It's just further proven by us having these IPOs.
The downstream effects for the industry at large is also massive that I don't think people fully understand. The way that private markets work is you have VCs or outside capital that invest in companies, and the way that they can actually make money off of their investments is companies have to go public, right? Or get bought up by like a Google or an Apple or whatever, or a bank or something. But that doesn't happen a lot in crypto. And so it's like, once a company goes public, the VCs and that capital takes profits, and then they can go and reinvest it back into the space. So there's kind of like circle of capital, right? And we've had that in the internet revolution, right? With social media, et cetera. They've all IPO'd, they've all had their moments, and they can reinvest it and keep growing. Crypto has never had that, right? The only option you had was if the company had liquid tokens. And this is that problem we have of these high FDV, low float liquid tokens, because they're basically the VCs, et cetera, that were investing. They needed these companies to launch liquid tokens when probably they shouldn't have or didn't need to, because they needed to take those profits. Right now, I know everyone hates that, VCs doing whatever, but like ultimately, this is what you got to do. If we're gonna rely on VCs to put in millions, billions of dollars into our space so we can build cool shit, like they're going to have to get their money out. Otherwise they go bankrupt and they no longer exist. And then the innovation flywheel no longer continues. And so we haven't unlocked the IPO yet. And so finally it looks like it's coming. Circle, there's Consensus, there's a bunch of other companies that I think
Kraken,
are Kraken,
Gemini.
Gemini. Yeah, there's a bunch that are going here. I think there's more media companies and data companies. And so what that does is it allows, this liquidity event. And so those that did invest early on can take that capital, reinvest it in new projects, right? We've seen that VC numbers are quite down. And this would be a massive stimulus to this industry to get that back. And also it might help with the dynamics we're seeing right now on tokens, because tokens are obviously just being sold off by VCs. Well, if they had an IPO way, then we could do it differently, and we don't have to do that anymore. And so tokens can be for a community instead of being for the VCs that invested, and IPOs can be for the VCs in the kind of traditional way. So like it should fix or even things out. So I think that's actually really good. And then most of all, I don't know, I'm just really excited to see what the value of Circle is going to be. Um, uh, Martin, I don't know if you've put any thought yet. I'm sure you haven't just yet, but I'm just curious. Is there a number that you'd be a buyer, or that you think we should be a buyer? What's your thoughts on Circle for that?
Give us the full report right now.
Yeah, do the math in your head. Let's go.
Impossible. Like you don't know all these relationships and who owns how much and those kind of stuff.
Yeah.
So, but like I want to comment this IPO. What do you think that would happen to crypto if there is similar process? And if you want to list your token or just have an opportunity to have a token, you need to go through this process where you can like show yourself, like make sure that like all legal things and everything is set up properly. And like, because what I'm trying to say is we might don't have thousands, hundreds of thousands of tokens out there. And like the money would be so distributed into so many shit tokens, and we would might have just a couple hundreds, but those would be like getting all the attention, all the liquidity. So the flywheel of that would improve them even quicker, and I think we would be in much better position. I mean, like I am all for free markets and free approach, but here it would really help if we had something like that for crypto
I think
markets.
we'll still have billions of tokens, but because what will happen here? So by the way, I do think this will happen in the market structure bill. Tokens that represent businesses that are securities, which there are many that are clearly securities, they should 100% need to go and get clearance from the SEC, and they should do reporting, and they should announce when they're going to sell tokens and blah, blah. They should have all the rules that every other company in the world, or the US, let's say, has 100%. There's no reason why we should be allowing what we're allowing right now in crypto. It's insane that we allow founders to dump on their community and they don't have to report it or say anything. It makes no sense, and lie about their numbers, et cetera. So right now, the industry is a mess. That needs to be cleaned up. But there are many, many, many tokens like meme coins, like NFTs, like what Zora's doing with tokens around images, like blockchains that are decentralized, like maybe even DAOs, but I'm not sure how that'll fit in. But like for decentralized things or things that are not securities, that are, what do they call NFTs, like collectibles and things like that, I don't think that they need to go through the SEC, and I don't think that they will force that. They've kind of already gave them the green light for things like meme coins. So I still think we'll have a gajillion tokens on the culture side and on the creative slash collectible side. But then on the business side, those tokens will probably be more something like the SEC, where they need to like normal like normal stocks, where they need to go and get approval and have like certain regulatory things that they have to follow. That to me makes complete sense. But I think they'll change those rules a bit, and it won't be the exact same as how you have to, like how Circle's going to have to IPO. Like I think it might be a bit different because that's costly. There's a lot of loopholes, like things you got to jump through. I imagine they're going to streamline that more, because again, with crypto, you're going to have so many more, projects and so much more tokens that can go public, let's call it, right? So I think they'll adapt to the technology, but we'll see. But ultimately, I think it's like you said, it's a good thing for sure.
And also, like I think that SEC or whoever said that they don't really approve yield-bearing stablecoins, and the reason is they are trying to protect the people, the users, because like not everyone is able to say like, okay, I'm gonna only use, I don't know, stablecoin from Maker or Athena because those are legit. But people would go and look for the highest yields available, and there would be so many stable coins offering high yields with unsustainable, like
Yeah.
Ponzinomics, those kind of stuff. So I feel we should be glad that they approve stablecoins first, and we need to get a kind of better sense of what yield bearing stablecoins are and what are the legit ones, what are not, and how to differentiate them and those kind of stuff. And Circle, Tether, they will eventually also kind of will need to offer some yield. So maybe it still needs a little bit more time, but eventually we will get that, I think.
Let's be honest, everything in crypto comes with fees. But here's a nice surprise. MoonPay Balance doesn't take a cut. You heard that right. No MoonPay fees when you buy or sell crypto with your MoonPay Balance. Top up with dollars, pounds, or euros, then you're ready to trade instantly whenever the market moves. And if you change your mind, withdraw your cash. No MoonPay fee there either. Simple, fast, ready when you are. Check it out at milkroad.com/MoonPay. Disclaimer, network and ecosystem fees apply. Meet CSUSDL, the stablecoin built for institutions and DAOs. Don't just hold basic stablecoins, earn yield, all without compromising security. Backed by regulated real-world assets and secured with institutional-grade risk management by our friends at Stakehouse Financial, put your treasury cash to work, earning native yield and protocol rewards. Built by the team behind Coinshift, which is trusted to manage over $1 billion in business treasuries on-chain, including Aave, Gitcoin, and hundreds of leading institutions, CYCSUSDL is gaining traction at milkroad.com/Coinshift.
I guess bullish Circle if they don't allow yield-bearing stablecoins, because that just means more revenue for Circle. Higher valuation.
But maybe it's not, though. Maybe it's not, right? Because
well, it's already growing. It's at 60 billion and it doesn't give yield away, so I don't think it needs that.
Yeah, but do you think that we've never really had this conversation? Like, is Tether's clearly the breakaway winner, right? Like, it would be tough to catch Tether at this point. Is USDC, is Circle clearly number two? To me, there's still a battle for number two. Like, to me, I could still see a Sky or an Athena catching up to Circle.
Circle is at 60 billion, and the next closest is Athena at 5 billion. There is
it's a big
no
gap.
number.
Don't get me wrong.
It's
a big gap. It's a big gap.
Yeah, there's no way. I think, and not only that, but USDC is also growing way faster than Tether. But does USDC need to flip Tether for it to be successful? Absolutely not. The pie is going to be massive here, and I think both are going to grow to trillions in the next couple of years. Trillions.
And I think at this point, they are not competitors really, because if you are in Asia and you want to pay for something, you have to use USDT. If you are in America, you have to use USDC.
Yeah.
Okay, that's for the payments. But if you are thinking about your savings account or whatever, then you're going to use, Maker or Athena or whatever. So those are kind of different things. Yeah.
But yeah, I think USDC will just continue to grow massively. They're going to be, or Circle, sorry, they're going to be a beast.
There's just enough. There's enough pie, as you said. Like, the pie is going to grow so much, and there's enough space for there to be a lot of products here, right? Like, we can have a lot of different stable coins offering yield in different ways, offering different types of products, and obviously,
at some point, I would imagine we find a way to abstract away what the stablecoin is, kind of like we talk about abstracting away the blockchain. But like right now, there's already, I don't know, 50, maybe 100 stablecoins, USDT, USDC, USD, blah, 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 blah. There's no way we're going to have that kind of
We don't have that many letters in the alphabet.
At some point, it's just going to be USD. And then I think you won't really know what's behind the curtain. Or at least like the organization that's running it might. Like, let's say you're holding it on Coinbase or Robinhood or whatever, maybe like obviously they'll know because they'll have some sort of partnership, but the user will just see USD in their account and they won't really know or care. Is my guess on how this all plays out in the probably near future, I'd say.
I got a question for the audience, and also for you, Martin. I want to know, everybody listening, are you guys thinking about, will you think about investing in Circle when they IPO? Would you consider buying that, or is that no go for you because you want to stay in crypto and you want to stay in the crypto world, and maybe you're not so looking to go to the IPO? And then Martin, are you going to write a pro report? Like, are you thinking about this as well for yourself and for our community?
Yeah, sure. But again, there's a lot of unknowns which we are yet to learn
And not
about.
now,
So
in a
yeah,
few
yeah,
months. Yeah.
yeah, sure.
100% we'll have a pro report. I'm like, we'll have to see the valuation, but I think like
Yeah.
long term, I'm very bullish on it. So I will probably be a buyer, but we'll have to see obviously the ins and outs of it. But yeah, I think it's a clear
What's
winner.
the what do you think that's the bear case for USDC and Circle?
Ooh, that's a good question. The stablecoin bill not passing, but that would be stupid. Like the bear case would be, and I don't think that at all this will happen, but everyone right now is up in arms about Trump and he's ruining the US and the economy, and like, all the capital's leaving the US and going elsewhere. So like there's your bear case. If the US no longer remains relevant and the US dollar no longer remains a reserve currency of the world, then there's your bear case. Though, who's best to like? Regardless, we're going to have stable coins, whatever currency it's on. And let's say it ends up being the euro, which would be a joke, but let's say it is. Sorry to all the European listeners. Like, who's probably best suited to capitalize on that? Probably Circle, because they already have the what's called EURC, EURC, I think. So like, stable coins make complete like are so obvious. And the bear case would just be that the US dollar no longer remains relevant. But I'm pretty sure Circle would capitalize on whatever the next currency is anyway. So I don't know. It's hard to find one, to be honest.
I think competition is the bear case. Like, this
Yeah.
it already is fiercely competitive. It is
Right.
going
Every
to
bank is about to launch.
everybody is
Yeah.
about to launch a
True.
stable
That's
coin,
a good point.
right? We are going to say, I mean, PayPal, right? Like, we don't even talk about their stable coin, and obviously it hasn't gotten the traction that we all thought it
Yeah.
might get.
Well,
Stripe
Fidelity.
is launching a stable coin. Fidelity, I've got Fidelity coming on the show later this week. I'll be asking them about that. Like,
Well,
so I think I that's why I say, like, I'm
Bank
not
of
yet
America.
convinced. I think there's a trap here to think that, like, oh, Circle's already won and therefore I should invest a bunch of money in their IPO and they're going to run away with it. And I think it's, as you said, they've got a big moat. It's likely that their network effects are
They,
big enough, but there's also fierce competition coming.
yeah, but they've got two things. So they have one thing about financial markets that really matters is liquidity begets liquidity, right? So the more liquidity you have, the more likely you are to get more liquidity. USDC obviously has that, or Circle already has that. So that's their moat. Their second moat is Coinbase. You have the number one company that is innovating and bringing crypto to upgrade the financial system, and Coinbase owns USDC or Circle. So like you also have distribution, right? Because Coinbase has all the connections with all the institutions and a large part of retail. So they have both ends of it. So I just obviously banks have distribution too. So like maybe they can compete, but banks, the thing people got to remember is these are old bloated companies that move so slow. They can launch a stable coin in the summer. I imagine they don't do shit for 2 years. Like they're going to take forever. And by then Circle's at $1 trillion. Like I don't think banks have a chance. I'm so bearish on old companies. It's hilarious. Especially old banks,
Because
especially old finance companies.
Old finance companies.
Yeah. Old finance
The
companies.
same way you would have been bearish on old information companies at the start of the internet, right?
Newspapers. Yeah.
Yeah.
maybe these old banks, they are just waiting for Ethereum to launch their native rollups, and then they will do that.
I don't think
I
that's
think they
the
know
way
what-
for
Yeah.
What
Martin
about,
Limited.
What about like another bear case could be, they do have very limited revenue stream right now. Now, I'm not saying they can't change that, but like they really only have one revenue stream, right? So that I mean,
Yeah.
traditional business, that's a bit dangerous.
Yeah.
I think, yeah, that's my bear case is we are bullish on them because they will be used as payments and everyone will accept USDC. But we will live in a future, I think, pretty soon where we will have US treasuries tokenized. And at that point, like, who is not gonna accept the payments in like US treasuries? Those are like super liquid. You can, it's kind of yield bearing asset. So like,
That's basically what a stablecoin is. What's the difference between a tokenized US
There,
Treasury and a
but they're
stablecoin?
but like
yes,
they're
That's
but
another just a middleman at that point, right?
yeah.
but Circle is the middleman then, and we don't really need Circle.
Yeah. You got to remember though, like at least, I mean, and I guess the crypto world's pretty small, but like USDC is the trading pair versus like everything, right? It's used in DeFi, it's used everywhere. It's going to be a while before some random tokenized treasury is going to get that, right? And so like across the crypto ecosystem anyway, USDC's already got all the partnerships, similar to how Tether does in their world too. So like, again, it's a tough thing for anyone new to come in and do. So I don't know. You make good points though. Those are good. Those are good bear cases for it. I agree.
But think about yourself. Like, if I'm gonna provide liquidity today, I'm not gonna use USDC or USDT. I'm gonna use some yield bearing stablecoin with
Right.
something
Okay. So
else.
you'd use SUSDS. What's 50% of SUSDS? USDC,
Would
right?
Yes.
So
Well,
either way, USDC wins.
well, it's different. It's Yeah. Probably let's not go there because it's more nuanced.
All
But
right, let's move off
yeah,
stablecoins. We're probably boring the
yeah, yeah.
audience now, but I freaking got you on that one.
No, you didn't. He just said he had nuance to discuss.
How?
Yeah,
It was
yeah.
fifty percent of it.
Don't let him do that to you.
All right, let's talk. Let's talk real quick. Robinhood. We had Vlad on the podcast on Monday. Really cool to have him. He's the founder of Robinhood. They're obviously a beast of a company. I think they're worth about 40 billion right now, or 35 billion, something like that, depending on the markets. And one of the largest, let's say, like fintech companies in the world, at least in the US, let's call it. And they really, from what we heard from Vlad, are going kind of all in on crypto, which is really exciting. They taking a bit of a different route than Coinbase, but like they ultimately want to do something similar. They want to upgrade the financial system. They want to give back to the smaller people, to retail, let's call it, and give them, democratize finance, give them more opportunity, et cetera. And they're already doing a great job of that in the US, and their plans are to really to scale globally, and crypto is going to be an integral part of that scaling. So exciting stuff. Before I give comment over to you guys, or for you, Jay, I know there was a lot of our audience who were a little bit upset, I guess, that we had Vlad on the podcast, which is understandable. For those that don't know, there was some stuff going on with GME back in GameStop back in the day, and Robinhood like shut down the ability to buy
Buy or sell?
GameStop. No, buy
Buy.
GameStop,
Buy.
and so the only thing you do is sell. So then the price tanked. Everyone lost a lot of money. So
Except for
like
Citadel.
yeah, except for Citadel. Well, so like the only thing I think people need to understand is we don't really know the full story of what happened in the background there. Like you got to understand TradFi rails don't really work so well. And so when you get a lot of capital flood into something, it generally breaks, which is what they said happened. And so like they just had to do this because they didn't have the capital to market make anymore. People can believe that or not believe that. I don't know. Either way, for me, it's like, guys, that was 5 years ago. I think they are doing so much to help the average person now in the US and globally. Like, I think these are things that we just don't understand, so we shouldn't have a strong opinion on because we weren't there, we don't really get it, and or like, can you forgive? I'm not sure. Like, obviously, if I lost money in GameStop, I didn't. Like, I'd be pretty pissed too. I just, I don't know. It's hard for me to think that he was trying to do that and like really try to be a bad person to those that had it. Like, I don't think he was trying to tank the stock, but it's difficult decisions you have to make as a centralized company, which is unfortunate. And I think a big part of why he's like, I want to move to crypto because it sucks to have to, like, he talked about how much bloat and how much like struggles there is to run a centralized business in finance, because it's not, you don't get to make the decisions. You are at the wrath of the underlying infrastructure of TradFi, which is a disaster. And so, I think he sees the opportunity of crypto and of blockchain, and I think he can see that they can upgrade Robinhood and offer way better things to their customers as a result. So for me, I was quite it was great to hear that, and kind of excited for what they're going, Jay, what they're doing. Jay, I'll throw it over to you. Just your comments from the discussion.
Yeah, like it was so interesting when he talked about when they went to 24/5 trading on stocks, and he was like, the lift to do that was monumental in
Yeah.
order to
Yeah.
figure that out. And here we are sitting like nodding our heads like, yeah, great, you went to 24/5, like
Yeah.
congratulations. And here we are in crypto, 24/7 is available. And he gets that. He definitely gets it. I think the thing that stood out to me the most was how he was much more crypto literate than I expected him to
Yeah.
be.
Yeah.
Like I wasn't sure if he was just saw crypto as an opportunity from a like, hey, you can buy sell tokens on Robinhood, and I buy sell Bitcoin and Solana, great, and like there's a lot of that happening, and obviously their target customer is more retail, so they started offering that. Like I wasn't sure if it was more of like, hey, this is a new product, or if he really saw crypto
The big
as, and
vision.
I should say more specifically blockchain, as new rails to basically completely rebuild his business and the future of finance. And he fully sees that and he gets it. And he talked about how they want to use that and they want to offer 24/7 trading, but they know how much the regulation, you have to work with that, you have to understand the compliance and all of that. So yeah, just, I mean, very, again, like I feel like I've never been so bullish as I am right now. Like these conversations that we're having with these major players who want to use our tech in order to bring better products to their customers, and he knows it. Like what did he say? He said it's a 10x
Yeah.
improvement on their current like rails of moving money across their network and the way that they manage their products. 10x improvement.
There was one thing he said that I think shocked you and I both kind of gave a double look, which was he talked about tokenizing private equity. And I was like, oh, I never really thought about that one. Like talking about like tokenizing SpaceX or OpenAI or whatever. And I was like, like what's funny, we didn't even think that. And this is what we do every day. But he's already thinking about that and trying to figure out how to do that. And I just thought, yeah, what they're doing, I think is going to be really cool. And I think it's gonna be very interesting over the coming years to watch Robinhood and Coinbase go at it and really like ultimately upgrade the financial system, right? We've never really had finance companies, especially in the internet, part of the era where they could really take off and flourish, right? Like we had Apple and we had Amazon, et cetera, kind of basically reinvent how information and communication is done around the world. And they just like took the old companies, which were like, let's say newspaper companies, et cetera, and they just dwarfed them. And they have become the biggest companies in the world. And we've never had that in finance, again, because of what we just said, the finance rails never allowed for it, right? PayPal was supposed to be the thing that revolutionized the finance world. Never did it because it just built on top of something that was already broken. And so PayPal is like a $50 billion company right now or something, not even. The highest it ever got to was like 300 billion. Whereas you have banks like JP Morgan at like 700 billion, right? So like the newer companies were never able to like dethrone the incumbents. And that's, in tech, usually that happens quick, and finance never happened. And I think Coinbase and Hood are the two opportunities we have for that actually happening. And I think both of them could dethrone the banks at some point in terms of like market cap and size, because they are Coinbase more than Robinhood right now, but Robinhood sees it. And so I think they're going to go that way too. They are actually rebuilding the financial system rather than just rebuilding on the old financial system. And so that is something that I'm probably the most excited for of what we're seeing right now is these two to go at it and really change things. And I know people hate that they're centralized companies, blah, blah, but like ultimately that's what we're trying to do here with crypto is like change and upgrade the financial system to give opportunity to billions of people around the world. And that's not going to happen if you have to download a MetaMask wallet and connect into Uniswap and blah, blah. Like it's going to happen with these companies that have, thousands of people that can like create this and build this and move this forward. Eventually the ethos of what we want with crypto will come true. But like, we need this first. We need these companies to push this industry forward. And then Coinbase and Robinhood are probably going to be the two that do it. So I'm really excited for that. Yeah. Any other comments on the Robinhood conversation?
What about I was just thinking this. Is somebody gonna come in and buy a bank that is a failing bank, and so you get the infrastructure, you get all the compliance, you get all you've got all the legal filings to operate as a bank in the US and maybe even globally, because there's a lot of banks that are not doing well right now, right? And I mean a little bank, not necessarily a mega bank, and maybe it's not in the US, maybe it's somewhere, maybe it's in another emerging economy, and that becomes the next player because they understand crypto, they move faster, they understand AI. Like I could really see that happening. I know Raoul Paul has talked in the past about he tried to buy a bank like what 10, 15 years ago and then decided not to because he just was like, I can't work with the regulators and do what I actually want to do. But
Start a
now,
new bank, not buy a bank. He's trying to start a brand new type of
I
bank.
thought he was going to buy one though. I
No,
thought that was the
it was
path.
starting a new style that
Starting a new
didn't
one?
have anyway. But yes, 100% is coming. What I think is going to happen, and probably the one who might do it is going to be Circle or Coinbase. They are going to buy not a small bank, but a big fucking bank. And because if you think about what they need, right? Once you have like Circle, for example, they have the technology. All they need is more distribution. So who is the best thing for them to buy? A bank. There's all the users. There's the dollars right there.
Yeah.
Just tokenize it and away you go. Right?
Yeah.
Like, why wouldn't they do that? So I think, I don't know if it happens this year, maybe. Probably we need stablecoin bill, we need market structure bill. Like we need a lot of these bills in place. Then you'll see the maybe consensus, the Coinbase. Honestly, I wouldn't be surprised if the exchanges did this. Or the who did you have on the podcast a couple weeks ago? Stani, who who is basically buying
Santi.
Sorry, not Stani.
Yeah.
He's basically buying. You know who could be the other ones to do this? Speaking of Stani, is Aave or DeFi protocols. I could definitely see either DeFi protocols or the crypto equities that are big and have big treasuries buying banks in the US or around the world and basically putting that bank on chain. Right. Which basically is like, okay, I'm going to put all these customers on chain, all their dollars move on chain instead. They all get stable coins. They integrate into whatever DeFi apps. Like Aave would be a perfect one to do this. For sure.
And it's just such a simple playbook because
so simple.
you said, you have the distribution. I mean, not simple. It's hard to execute, but like the playbook is pretty easy to understand. You have the distribution and you have a 10x lower cost way to do this so you can become profitable, because profitability is the biggest issue for a lot of these like behemoth companies. Like in Santi's case, he's not buying a bank, he's buying a telecom company that has massive distribution and basically going to turn them into a bank by offering like banking products because he believes that telecom is the best way to get distribution and get directly in front of a customer. Like you can see a lot of things happening, and in the end, it's all on crypto rails. It's all going to be on crypto rails.
But the problem is that most apps don't have money for it, but the banks do have those money. And so once they all see, okay, we are slowly dying, but we are still worth 200 billion. And there are like pretty good projects and apps in DeFi space, which would bring us not only the talent and the infra and like experience and Lindy effects and everything, but they cost just like, I don't know, 2 billion or 5 billion. It's, like, so who can buy who, right? And I think
so you're saying
now it's still
banks
different.
buy DeFi?
Yeah.
There's definitely going to be some sort of merger acquisitions here between DeFi and banks and just crypto equities. Which way it goes? Which way it goes, I don't know.
Like DeFi projects are worth 8 billion max Uniswap.
Like nothing.
8 billion FDV. So it's not liquid. So how they could acquire some bank?
Right.
No way. But the opposite way, it could work.
Yeah. I mean, there could be some sort of merger, right? And I don't know. I don't know how they do it, but for sure it's coming. I don't know if it's this year or next, but it's definitely coming. That's going to be really cool. Also going to piss off a lot of crypto people, I think, because, they hate the banks. And so they're like, oh, we can't bring the banks in. It's like, guys, this was the plan all along. Obviously we got to do this. But anyway, whoever is the first crypto company to buy a bank, they're going to be a legend and they're going to go down in history. So I'm really excited for that. Okay.
And piss off crypto Twitter to no end.
Speaking of businesses that are struggling with profit, let's flip this one over to Ethereum.
Great transition.
Thank you, Jay. I thought you were going to respect that one. So, okay. Martin, I'm going to throw it over to you in a second, but let me just start this one off. So up on the screen here, I have a chart of Ethereum's network REV. So this is basically like looking at their base fees, so transaction fees, priority fees, MEV, and as well blob fees, which is what L2s pay for data availability. And if you remember back to last cycle, for those that were here, Ethereum's fees were just absolutely bonkers. Like in November 2021, which is the peak of the cycle, Ethereum brought in almost $2 billion in network fees in 1 month, just 1 month. Crazy, right? This is when everyone's like, okay, Ethereum's going to be the thing. Like, this is nuts. Now, obviously, that was a different world. Ethereum's fees were ridiculous, but everyone's trading NFTs on the menu. It made no sense. They had no competition. It was ridiculous. Since then, we've got a lot more competition. Ethereum has scaled in a different way, moving a lot of that activity over to L2s. They've raised the gas target, or lowered, whatever it was. So it's cheaper. So they've done a lot of things to scale their block space in the Ethereum ecosystem. Today, in March, which just finished, it's April 1st as we record this, they hit $22 million for the month of March in total network REV. The last time they were that low was June 2020. Okay. June 2020. That was like just before DeFi summer hit. So like we didn't even have DeFi then. Like it was there, but no one's really using it. It was like the next month that things just started to take off. So like it's wild to be this low. I guess for context, I'll just say Solana, which also is down massively. Like, look, in January of this year, it hit 200 million, and it's now down to, in March was 18 million, but not as big of a difference as Ethereum, obviously. I don't know. Do you want me to give my opinion first, or Martin, do you want to kind of run with this for a second?
You can start. And by the way, you have monthly for Ethereum, but weekly for Solana. So maybe
really?
change
Oh,
time
sorry.
frame.
Okay, so Solana was actually, just to clarify that, in January was 550 million. Today it sits at 71 million for the month of March. So it's 3x Ethereum. I'm going to let Martin explain what's going on there in a second, because I think a lot of people are getting this one wrong. One thing I just want to say in Ethereum, obviously this looks abysmal. This looks terrible, and it's not great. But the way that I sort of think about this is Ethereum scaling, right? They have overproduced block space now, essentially, with L2s. And they have changed their business model, right? They sort of disrupted themselves, which ultimately is a good thing, not a bad thing, right? They've disrupted themselves. Their focus is on DA instead of MEV and all the other ways that they were making money before, priority fees, et cetera, which was a lot of their revenues back in the day. And instead, they've kind of changed the model so that they can actually scale. And so this kind of reminds you of like back in the day when the internet was getting adopted. I forget what year it was, but they built all these cables all around the world, and so they basically like scaled the internet, and then like no one used it. There was just not enough like actual activity to use up all that bandwidth. And so there was a period there where everyone's like, oh, is the internet even going to make it? Like this stuff looks dead. Why did we just build all this new infrastructure? And again, they just overscaled. And then it took, 5-10 years, whatever it was, it took YouTube to be invented to start to use up all that bandwidth, right? And then all of a sudden it was like, holy shit, we actually didn't even build enough. And so I think the same thing is true here. We've scaled Ethereum and its network. The fees don't make sense, but that's not ultimately what I think we value blockchains on. And so now we're waiting for our YouTube moment, right? Which is, coming with stablecoins, coming with other things, et cetera. So like, I'm not overly concerned, although obviously it looks really bad. But ultimately, I'm not overly concerned. The thing that I think trips people out is, well, Ethereum's going down so much and Solana's continuing to go up. And now Solana's, 3.5x what Ethereum was. That's the part I think where people are fighting Ethereum and they're like, okay, this doesn't make sense. Ethereum's done. Martin, I'll throw it over to you. What's really going on here?
I think we tend to look at the previous cycle, 2021, and see like, billions on the monthly fees. It's just insane. And that year, in that previous cycle, we were just kind of all learning what smart contract platforms enable, what should be built, how these blockchains should be designed, and all these kind of stuff. So we are definitely not gonna see something similar where like Ethereum is making billions in a monthly fees. And it's because we are doing a progress, and we have learned a lot of things, and there is more competition and a lot of stuff. But today, Ethereum is scaling through layer twos, and they are increasing gas limits. So like they are doing everything they can to reduce these kind of fees that we are looking at right now. So why is everyone fighting that Ethereum fees are going down? Because
It's their goal.
everyone wants them to go down. But the point is, like, even if you think about Facebook or YouTube, everyone was using them like for years, because that's where all the users were, where all the content was, and they were not charging anything. They were not monetizing like any of it. And then at some point, when they were big enough, they started to think about monetizing their products, right? So, they came up with advertisements and sponsorings and those kind of stuff, and now they are making a ton of money. And Ethereum is in a similar position right now. We have learned a lot over the last few years, and now Ethereum is kind of um, doing and trying to develop a better products for layer twos and other chains. And Ethereum is not perfect. I'm not saying like everyone should go and use Ethereum, but many people are just looking at this chart and ignoring everything else. But really, Ethereum is still the most decentralized, the most secure chain with a lot of clients. It never went down, and those are the properties that people might not appreciate today, but like institutions who are coming, they appreciate these features. Like the security is the number one thing. If you know Robinhood or Bank of America, they are all talking about using blockchains. And okay, the blockchain infra is 10 times better and cheaper, but are you going to use blockchains that are like not secure, or you are going to prioritize security above everything else? So
I'm just
like
gonna stop there one sec. When we talked to Vlad on Monday, he brought up L2s and L3s. He never mentioned any other like L1 blockchain like Solana and stuff, but he did bring up potentially building on an L2 or L3 and creating that. So like you could tell he really understood that model on what Ethereum's doing. He didn't really even blink at the other side of things. So I think you're right. That is what institutions care about, and that is where they want to build. And we're seeing it. I mean, Fidelity and everyone right now is launching stablecoins and L2s and whatever on Ethereum. And it's because Ethereum is building for the long term, right? And
yes.
so, like you said, just like tech companies were, they were just building for long term. They wanted to make sure they got their moat, their users, and they'll figure out revenue later. And I think that's exactly what Ethereum's doing now.
Exactly. Yeah. It's more of a, if you are bullish that institutions and all the apps and Robinhood and like many others are coming and they are going to use Ethereum, then you shouldn't be just looking at this chart and like, hey, Ethereum is 200 bill, it's too much, it should be repriced and go much lower. You should be like thinking about that future. Like if everyone is building on top of Ethereum, it might probably never be able, you might never be able to justify Ethereum's valuation if you are gonna use discounted cash flow model or whatever. It's not gonna what it's not going to drive the main value for Ethereum, at least not in a near future, in the next
Hey, Martin,
5 years, let's say.
explain to me why Solana's crushing it though, and they're at 70 million last month.
Well, because there is less activity and therefore less MEV and less priority fees. But what's really interesting here is when you think about Solana, you need to be bullish on MEV that are generated on these blockchains, because like 95% of the REV on Solana is based on MEV tips or priority or jitter tips. It's basically saying like, hey, I want my transactions to go first because of whatever reasons. So it's kind of different model, because when I was talking about Ethereum, it's they are their vision is, okay, we are gonna scale this very secure, very robust infrastructure, and like people can build on top of us and only consume our DA or base sequencing, whatever we offer. But Solana, you really need to believe in MEV, and that MEV will stay and ideally will only grow over time. But the critics are saying, we think that MEV might be captured by apps or like, the front ends that generate that MEV because, well, I also have to say not all MEV is extracted. So maybe sometimes like I just want my transactions like immediately happen. I don't want to wait not even seconds. So it's not like I'm trying to get the better price. So not all MEV is bad MEV, but most
But a
of it
lot,
I would
of it
say
is.
is.
So for
Yes.
those that don't understand MEV for a second here, or priority fees, what this is essentially is most of it is bots or whales or traders, like professional traders, who are front running your transaction. So you as retail go to trade a meme coin, they front run it and do it just before, and they take a little bit of cut from what you're going to get. So you get a little bit of a worse price. This is a bad product for people, right? But it makes a lot of money for those small amount of people. It's a very small number of wallets that make the money on this. Okay. And ultimately, though, that's a bad product for the user. And so again, if we think long term, is that going to remain or is that going to go away? Blockchains have the technology to remove that, right? We already have it with Cow Protocol, for example, over in Ethereum. So do we think that in the future there's going to be more MEV or less MEV, right? And as a percentage. And my guess, I think Martin's guess is there's probably going to be less. Now, there are people like Multicoin Capital, they believe that MEV is everything. That's how you value an L1. We believe that that's actually not the case. And there are many others like who we thinking from the Ethereum Foundation. Justin Drake, exactly. Think it's the opposite. It's not going to be that. And we're going to create either apps or technologies that remove a lot of the MEV and make it a more fair place to trade and transact on chain. And so right now, when you look, as Martin said, 95% of all of that REV on Solana is that MEV and fees. So let's say in however many years from now, we remove that, right? Let's say you removed it today. Solana's REV or revenue here is actually only like what, 5 million? Something around that would be 95%, even less. So like, at 71, yeah, it's less than 5 million. So
you can see base fees here. That's what it represents. Base fees are just the fees, and then you have priority fees, cheat to
right.
Those are the NFV.
Well, and vote fees, which is 6 million. So those remain, right?
Yeah, vote fees remain. Those are the validators. Yeah.
Right. So okay, so you're 6, 7 million, whatever. So like way lower. And so it's kind of actually reminds me of, let me just zoom back out on the Ethereum chart here, where we said here in 2021, just like remove these numbers from your brain because this was an anomaly. This will never happen again, where you have one chain that has these, $50 fees that people will buy these stupid cartoon NFTs on. Like that's never coming back, right? And I don't mean maybe people won't buy NFTs, but meaning like people doing it just to do it and like pay these ridiculous fees that make no sense. Like that's never happening. Plus no competition. So this is gone. You might as well remove that from your memory. I strongly believe that this also should be removed from your memory eventually. Now, I don't know if this is going to take a year or 2 years or 3 years. That's the thing, is the timeline is we're unsure. But at some point, I think this gets shrunk. Now, maybe they can get their base fees to be enough revenue, but like I don't think so. I think and what Martin thinks, this is what we've talked about before with our data availability pro report we put out, and we did a show on this before. Data availability is where the big revenue is going to come from. No longer is it going to be MEVs and tips and stuff. So that's the world we're thinking happens. But when that happens, I don't know. Do you have an idea on timeline, Martin, or do you have like an assumption there? Or are we just way too early?
I think Solana this cycle will do well because most of the apps there, and there'll still be, maybe we'll see new all-time highs for Solana REV, real economic value this cycle.
For sure. I think so for sure.
Yeah. That's why we still hold them in our portfolio too. But when you think about 5 years, 10 years horizon, then it's get blurry, and I'm not sure there.
Yeah, the timelines are unknown, but it feels fairly certain that's the way we're going. Okay, do we want to talk about the Bitcoin bonds? We've got like 5 minutes. What do you guys think? Is that a quick conversation or save it?
I like it, so let's just quickly discuss it.
Okay, let's do it. Martin, why don't you walk us through? So Bitcoin bonds, I haven't really learned about it yet, so I don't really know. So Martin, why don't you just teach me and Jay what it is? Jay just woke up, so he probably doesn't know either. Teach us what it is, and let's have a conversation on Bitcoin bonds. Sounds interesting.
Okay, I'll just read it, and then I'll try to explain in my words. Trump team says they want to buy Bitcoin in a revenue neutral way. It means they want to acquire Bitcoins and they don't want to pay for it. Okay, and who doesn't, right? It's a good idea. And the way they want to do it is that they want to issue 10-year treasuries, and 10% of that collected money they're gonna use and buy Bitcoin. And the way it helps them to acquire like Bitcoin in a revenue neutral way is that, okay, here are 10-year treasuries, but we are not giving you 3%. 3%. We will just give you 2%, but then we will also give you an upside in Bitcoin because we are going to use 10% of your funds and buy Bitcoin. Until a certain point, you will get all the exposure to that Bitcoin that they used to buy with those 10%. But until a certain point, your profits will be split with the treasuries because they took the risk. And how they are now, you think how it's like not costing them anything, because now if they are going to issue US treasuries, let's say there is a 3% yield, so they need to pay 3% interest, but now it can be only like 2%. And that 1% kind of difference would bring them that premium that they are buying the Bitcoin. So if Bitcoin goes down, they will still be able to, okay, we might lost 10% of that capital because we bought Bitcoin, but Bitcoin went to zero, but we issued our debt for 2% and not 3%. So
Right.
you see the difference? And I think it's super interesting. It kind of feels like it still needs to go through legislation or something, but
Yeah.
it,
It looks
it's
like it's
kind of
just a
feel like,
brief by
yeah,
who Bitcoin Policy Institute. I don't even know who that is or what that is. Do you know who put this out? Who these guys are?
I don't know.
No.
But it was retweeted by Matthew Siegel from 1x, so I think it's a credible source.
Yeah. I mean, look, it's super interesting. I think that governments should be like, I don't know if this is the right answer, to be honest. I have no idea. But we have this like incredible asset that is global, that is decentralized, that is permissionless. It's getting adoption regardless of governments participate or not. Why not use it to further the strength of your economy, right? Or not your economy necessarily, but like the strength of your balance sheet, let's call it. And so it's smart to start finding ways to integrate this. And I mean, this is all what we talked about of upgrading the financial system, right? We've relied only on the basically fiat for a long time, or gold, and now we have these new things that you can do a lot of things with. And it's like, why not experiment with them, and try to find new avenues to, I mean, ultimately generate revenue for the U.S. And I guess for the consumer as well if it works out. I don't know. It's kind of cool. It's interesting in my opinion.
Yeah, and I think like we all want, not just United States, but pretty much everyone buy Bitcoins. But like, how should they do it? Like, should
Yeah.
USA just issue new money and buy Bitcoins for it? Like, you know,
There's your bear
while
case for
they're
Circle.
while they are still trying to reduce their expenses and fire people and whatever, and then they would just issue and to buy more Bitcoins. So this seems like a pretty good way to do it.
I think what people need to do here that need to understand is like with this Trump administration and the deregulation of everything they're doing in tech and this like revamp of government, revamp of the financial system, like they're really trying to change everything. And so like this is one of those moments in time where like what you think you have to start to like get rid of that and be like, what could the future have in store for us? If we were to rebuild the financial system, what would it look like? If we were to rebuild AI or the internet or whatever, like what would it look like? It's like those are the opportunities we have in front of us here. And I think that these kind of things there's going to be more and more of them. They're going to seem weird and reckless to a lot of the boomers, right? But I think like ultimately this is how we get ourselves out of the fiat mess that we're in, is by utilizing blockchain and crypto assets to literally upgrade the financial system. Like Coinbase has the best slogan. I love that they say that. That really is what we're trying to do here. It's like we need to be okay and accepting of these like random weird new ideas. I'm sure there's a lot of people out there who would look at this and be like, this is crazy. What are we doing here? I don't know. I think I embrace these things, and I want to see more of these things because I think it's ultimately where the future is going.
Yeah.
And I think you
Agree.
can't underestimate when a sitting president says you can acquire an asset as long as you as long as you do it in this way, right?
Yeah.
Like,
Right.
yeah, a lot of people are now trying to go figure that out, right?
Right. Why not?
And like, why? Yeah, of course they are, right? They believe in the asset, they believe in Bitcoin. We have an avenue to acquire it. Like, let's go, right? So
We
we're
talk
gonna
about
see
network.
more and more of this.
Well, we talk about network effects a lot on this show, and there's no better network effect than the millions of people that own Bitcoin and want Bitcoin to keep going up. And so when you give an opportunity for the people that own Bitcoin to, find more ways for the US government to buy Bitcoin, they're going to figure that out. You know what I mean? Like that's network effects right there. So yeah, super, super cool. I think it's actually kind of exciting. Let's see. I mean, will it go through? Will it get past? Like, who knows? Probably not, to be completely honest, but like, hopefully. Cool. Well, this is a good conversation, guys. I actually learned a lot during this conversation. So appreciate you guys for showing up and being here and having another fun conversation.
Yeah.
Thank you,
Thanks.
gents.
Thank you.
Great times. Great times. Let us know, you guys listening in. I'm really curious to know if you guys are going to if you're interested in investing in Circle and or other crypto IPOs, because we can definitely talk more about that in the future. As Martin said, there's not a lot of right now. It's fun to have a conversation about it, but as we get closer to these IPOs actually happening, if you guys want to make those investments, let us know and we'll make sure we help you think those through and be prepared. Wow, another great episode. Thanks so much for listening, folks. If you want to hang out and jam in person, have a beer, come to Consensus in Toronto, May 14th to 16th. I'm going to be there doing a bunch of shows live on stage. Kyle's going to be there as well, as even a couple more of our team members I think are going to join. We're going to have a Milk Road event, and we've partnered with Consensus to get you guys a discount off tickets. So hit the link in the show notes. You can save $350 on your Consensus ticket. Hope to see you there. Have a great weekend, folks. Thanks again for joining in. We'll see you next week. As always, if you liked today's episode, please hit subscribe and make sure you follow us so you don't miss out on the next one. There's also a link in the description to our free 5-minute daily newsletter where we simplify crypto for you while making you laugh. And if you're willing to step up your crypto investing game, we're going to also leave a link for Milk Road Pro. You get access to our portfolio where you can see exactly what we are buying. This is your number one resource to help you invest successfully in crypto. One final note, this show is for educational purposes only and nothing we say is financial advice. Investing in crypto or any asset is risky and you should never invest more than you can afford to lose. Thanks so much for listening in, my friends. Have a wicked awesome day.